All right, good morning, y'all. Welcome back to learning to day trade and hopping on the charts for market experience. We are quickly going to go over what we saw yesterday, and as you can see, I tried to take a paper trade that did not go so well because I'm a dumbass and still trying to learn. But I got excited. We're going to go over this really quick. I got excited that it tapped the equilibrium, that it tapped into the 15 and the 30, and it hit equilibrium. And I thought, for some reason, that this meant it was going to be a true break of structure because it was below this low right here. However, what I failed to realize was that on both the higher time frame and look, no break of structure on the 15, no break of structure on the 30 minute, definitely not a break of structure on the 1 hour. So pretty much it was absolutely nothing. And I hopped in the short looking for the setup in the bias, but it did not happen. Now, I mean, this is like I don't know, can I show this? Am I allowed to? I mean, what you're looking at, excuse me. I do like 0.1% of this 100K fake paper trading account because I don't want the money to seem like this trade that I took, this paper trade I took in August for some reason, and I used 1% of the account, and so it was like $300. See, to me, that just stimulates the wrong values, as well as it's not true to if I was starting with $1,000 or anything like that. So what we're gonna do, I journaled this trade out. I made a trading journal. So here's what the trading journal says. Let me move this. Can you even read that? Why does it look so bad? On. Well. Hold on. Does that look better? I hope you can see that. I feel like you should be able to see that. But on my OBS, it looks awful. Why does it look that bad? Fuck. I don't know. Alright. Anyways. Hopefully you can read this, but we'll look at what I wrote. Date of trade yesterday, the 14th. Pair, stock, GBP, USD. The trade bias was bearish. Win-loss, loss. Now let's talk about it. Why? There's a bearish liquidity sweep, which created a 30-minute fair value gap and 15-minute fair value gap that were in line with the bearish 1-hour equilibrium. Now, what do I mean by that? This, which I should have seen on the higher time frame, was just a liquidity sweep for here and for way over here on these old ones. So it turned out just to be a liquidity sweep, just like this move. which after seeing this, I should have been able to kind of guess. At least I should have been like, oh, after a liquidity sweep of this one, this liquidity, and nearly that liquidity again from old time frames, this was going to happen again. So I didn't even realize that this was a liquidity sweep, first of all. Second of all, there wasn't even a high time frame break of structure, so I don't even know what the fuck I was getting in on. A 5-minute break of structure that ended up chopping up, and then news was getting ready to come out, and I was trying to also rush this, thinking that it was going to help with news, or not help, that like I could get it in before news. Now it does get up here, and it wants to. It wants to twice on both the higher time frames. Tried it. A lot of bearish pressure. Break of structure right here. Couldn't do it because the market was closed at that point. It's 5 p.m. So we go into fucking Tokyo Asia session. Basically, this was just a bunch of bullshit, man. It was just stupid. I wouldn't say stupid. I feel like we looked at all this stuff properly. Equilibrium was probably wrong. I mean, it got out, but that was a liquidity sweep from like way over here. These were also London lows. So if we're thinking about the trading sessions behavior, this was a London low that New York pre-market got into, which then reacted off this break of structure on the 30-minute, which broke structure here on the 30-minute. It broke structure on the 1 hour right here. Like, there was a lot of higher time frame shit going on that I just did not pay attention to. So when it comes to journaling the trade, which I hope this looks a lot better than it does on there. Yeah, it should look alright. Just because I have the screen so small. So the New York pre-market open shifted market structure to the upside, which I believe would reach the 30-minute fair value gap. Good discount for bearish with equilibrium. Also at the 15-minute fair value gap. The reason this trade truly failed is because I took the trade too soon. I mean, it never ended up working out, but I took it off of nothing. There was no 30-minute, 15-minute anything. These were just retraces to keep it going. I got trying to see it at both fair value gaps and equilibrium. There's a 5-minute break structure. However, there was no break structure on the higher time frames. Not the 15, not the 30, not the 1 hour. There were small retracements for the bullish break structure to continue moving forward. The bull run got further into the equilibrium and 30-minute fair value gap and started to turn bearish on the 30 and 15. However, it was too late in the New York session for anything else to happen, and now the Asia session is taking it back up to the previous Asia session highs. Feeling the imbalance caused by the bearish liquidity sweep, which was also caused by news. So meaning that wasn't even like a, in my opinion, if it was caused by news, it wasn't something that the market truly wanted to happen. So they have to fill the imbalance. Probably more likely to fill the imbalance because I also looked at the news, that piece of news from, we looked at that piece of news from the last time it happened, and the same exact thing happened. Wait, let's do that again. It was Tuesday the 14th. It was this Clement. If it was anything at all, which is interesting because it wasn't even that high impact news, but I think this is what we looked at. Because June 10th, it was super bad. And I think we did look at that. June 10th. Yeah, right here. Exact same liquidity sweep. Fills the imbalance. Does it again. Lower high. Fills the imbalance. And the session structure is the fucking same. So that was just nice and dandy. So, I'm supposed to get rid of that. Everything back there is fine. So we're going to get rid of everything here. Call that one over with. And let's see what we can find now. Now let's see what we can find on the higher time frame. We have New York tapping into the London session lows for pre-market here. And wait, where did I? Oh, I drew this on the 15-minute. Okay. I mean, it's all that. It was all that. Drew that on the 15-minute. We have London session hitting the Asia session highs, coming back down, and New York is trying to now hit the London lows and come back up. So as long as there's a break of structure on these higher time frames, then it'll probably continue to go up, but that might not be the case. So let's see if there's any building blocks. Get rid of this break of structure, get rid of this one. See if there's any building blocks on the high time frames here. So we've got, and we're gonna be this high. Let me just get rid of this. I have the lines for a reason. So yeah, there was a 4-hour fair value gap which got filled, which now there's this equilibrium from this retracement. There's probably a 1-hour order block down here. It's the move that this move down caused this move up. Could even throw this one in there, just like all of that. We've got a 1-hour fair value gap right here. A little bit in there, which already got tapped twice. So especially it got hit this first time and ended up going higher. So we can't really use that one. Because it's getting hit again. These are the London lows. We could do, like I said, we could do this equilibrium from the move up. Be bullish equilibrium. I just don't believe that our bias on these high time frames is anything close to bullish. I mean, like, recent market structures slightly bullish, but that was just filling this imbalance. But these are all, this is all just lower high, lower high, lower high, still a lower high. So we're still looking for bearish moves, in my opinion. But we don't have any setups for bearish, which is the problem. There's no fair value gaps for bearish to come back up into. There's nothing from like way up here. So we're not even going to look at the bullish shit, honestly. Let's just look, and now let's look at the sessions. This will be like 19. 4 hours too long. Is there like an in between here? 45-minute? Nah, that's lame. So this 1 hour fair value gap already got hit. There's not a fair value gap here. See anything on the 30-minute? So, okay, wait. Let's go back down to our bias because there's no real big news today. Just whatever the fuck that is. And it was good for U.S. currency at 8:30 this morning, and at 8:30, nothing happened because it was pre-market. So, 4 hour. So, market structure is bullish. There's no like bearish break of structure. It's not going down right now. However, the entire structure is bearish, and there's just this liquidity sweep here on these highs. However, this is a little bit of consolidation, just fixing this imbalance. There's probably going to be another move like this. So that's Tuesday, it's Thursday. The daily is not breaking structure. Daily's bearish. 1 hour is any break of structure. That one closed. I guess this is where I would say I get confused with the structures, because on the 1 hour this close, it's bearish, bullish, and then consolidating. However, the bigger picture is bearish. That to me looks like a liquidity sweep. However, this little break of structure didn't provide anything. And now we have to think of the 30-minute, 15-minute lows that were supposed to be respected, which is now causing this break of structure. So it will be a break of structure to the upside again once it hits here. And if that happens, then we have take profit 1, take profit 2, take profit 3. If they're shifting the whole market during New York today. 30 minutes in up market open, and we have, I would have to see, that's what I didn't wait for. I'd have to wait for a 15 or 30 minute break of structure above this candle. The 1 hour would have to get all the way up here if it was really gonna go. But let's see, but I don't even want to be taking longs because the chart bias is bearish. I gotta research more on bias. Like, look at this. This is weekly bearish bias. Bearish. Bearish with like a bullish move right now. Like, I don't know what to do with that, so I gotta continue to learn that. So there's really not much bearish wise. The sessions might stay true. I have to keep learning and not make mistakes like that. So at least we journaled it, and lessons learned. Don't get caught in lower time frames. I took a screenshot. Pay more attention to the bigger picture. Don't trade on news. Don't rush because news is coming. This was a 1 hour and 4 hour liquidity sweep. I could have seen it coming. Also didn't stay true to the Forex strategy right here, hitting these lows. It could have been like take profit at 1. Like, you could have held it. It got back up. It got all the way back up. it's already there. So you could have waited a whole day for that. But if you took it off this in the middle of, that would have been 30-minute break of structure here. After this candle closure, this candle closes, we drop into the 5-minute. So 5, 10, 15, 20, 25, 30. This candle closes, we drop into the 5-minute. Probably would have waited for, see, there's the break of structure as well, right there. So after this, well, where'd the candle close for the 30-minute? Because realistically, we should have been focusing on the bull for these sessions. So if it closed here, well, close up here, go into the 5-minute. Didn't close till it was up here. We're probably taking it closed there. Yeah, so that was the little down wick. Probably going into the trade. Up here. Probably off this candle, if this is when it opened. We put it down here a little bit, and we go back up to here. But it took all fucking day, so like that's not even. It would have taken forever, and it's a 1.5 risk reward trade. You could have gotten it maybe off this 5-minute, like the 5-minute break structure here, and would have had a better entry. Here, this is where it opened. Then gone to like here. It's the same thing though. There. The low was too low. I mean, yeah, same thing. Same old, same old. Not really. We'll figure it out. Appreciate you guys for watching. I hope you guys enjoy. And I'll see you guys next time and continue to learn. Peace out.